How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to be talking about why you should use the TC top and bottom finder with the trend exhaustion and price versus money flow in your trades. Let's just jump right into it. Let's get started. I'm going to start out by answering a couple of general questions. First one being, why should you use multiple indicators in the first place? The reason I like to use multiple indicators is because no single indicator is 100% accurate. If you use multiple indicators and they give you the same signals, you can be much more assured that this signal that you're getting is a good one and the trade will be successful. Furthermore, using multiple indicators gives you a much more well-rounded view of the market, allowing you to make better educated trading decisions based on a variety of factors. So why these indicators specifically? All the indicators I'm about to show you have a proven track record and are Trade Confidence flagship indicators. These are the best ones that we have available. Next, these indicators are leading, which means they provide price predictions before any price action actually happens. Each indicator has its own set of strengths and weaknesses. The TC top and bottom finder, trend exhaustion, and price versus money flow all complement each other excellently. They each compensate where another is lacking. The TC top and bottom finder is used to provide signals for precise entries into the market. However, it does not show divergence, which is a great precursor to potential trend reversals. This is where the other indicators come in. The trend exhaustion is the top indicator for tracking trends and predicting reversals. You can use the oscillating line to find tops and bottoms in the market. However, it does not provide precise entry points, which is where the TC top and bottom finder is really important. Finally, the price versus money flow can be used to track large transactions in the market and compare it to price. These large transactions come from market makers, and it is always better to play on their team than it is against them. Where big money goes, the price is sure to follow. However, much like the trend exhaustion, it falls short in that it cannot provide exact, precise entries. So now you know why I use multiple indicators while trading and why I use specifically the trend exhaustion, price versus money flow, and TC top and bottom finder indicators. From here, I'm going to go into a quick tutorial on how to use each indicator individually, and after that, I will show you how to use all of them in combination to start your trades. Starting with the TC top and bottom finder indicator, this one uses buy, sell, strong buy, and strong sell signals to give you the most accurate entry points for your trades. A buy signal shows a possible entry for a trade and requires confirmation from another indicator to validate the entry. A strong buy, however, does not require the use of another indicator and stands fantastic on its own. However, it's never a bad idea to use other indicators to confirm the trade, even if it is a strong buy signal. A sell signal shows a possible entry for a short trade and, similar to the buy signal, requires a confirmation from another indicator to validate the short trade. Again, similar to a strong buy, a strong sell signal stands on its own and does not require the confirmation of another indicator, though it always helps. The price will just about always stay within the bounds of the red and green channel you see here. If it does cross outside, this often shows that this is the end of the trend, at least for the time being. You will also notice a blue midline here. As long as the price stays under this, it is considered a downtrend, and if the price is above this midline, it is actually an uptrend. Liquidity pools are colored in zones on the edges of the channel and indicate strong points of volatility and trade volume. The green zones represent the liquidation of short trades. Often, if the price enters the green zone, it is very likely that long traders will take over and shoot the price up. As you can see here, it happened twice. As soon as it entered this green pool, it moved up. And again, right here, it moved up and then went sideways. Red pools are the opposite and indicate strong points of the liquidation of long trades. If the price enters the red zone, it is likely to bounce off and move back down as short traders take over. Next, let's talk about the trend exhaustion. This indicator is designed to track when uptrends or downtrends are overextended and due for a reversal. It consists of two red zones, an upper and lower red zone, with a white line that oscillates between them. The white line moving into the bottom red territories of the trend exhaustion indicates that the downtrend, just like right here, is exhausted and likely to move up soon. An inner red section reading means that a move up is likely, and an outer red section indicates that a move up is imminent. Here we see that the white line has just entered the red section in a sharp downtrend like right here, and we are likely to see moves up soon. If the trend exhaustion enters the upper red section, this means that the uptrend is likely exhausted, as you saw here, and is likely to move down. If it enters the inner red territory, this means that a move down is likely. If it enters the top red territory, this means a move down is imminent. Trends in price tend to follow trends on the trend exhaustion. As an example here, we have a series of lower highs and lower lows, and this was correlated in price right here with a bunch of lower highs and lower lows. However, if you see divergence, the price will very likely follow the trend exhaustion very quickly. As an example, here's a lower low on the trend exhaustion that correlated to a higher high in price. Immediately after this trend finish, there was a massive downtrend as indicated by this divergence here that showed a downtrend that was imminent. The downtrend that was indicated here happened almost immediately after this divergence happened. This is a major strength of the trend exhaustion that the TC top and bottom finder does not have. Last but not least, we have the price versus whale money flow indicator. This one is used to track whale money through the market. Whale traders are the market makers, so following them will provide you the best chance of success in crypto. If you check right here, this green line indicates whale money movement, while this pink line correlates directly to the price. The green line moving up means that whale traders are buying and pumping money into the market. This typically pushes the price up, and as you can see right here, as the line went up, so did the price. However, when the green line moves down, this means that whale traders are selling, pulling their money out of the market and driving the price down. We can see this happen right here almost instantly. As this green line moved down, the downtrend began. When the direction of the green line diverges from the price, we can expect a strong move in the opposite direction of the trend in price. As you can see right here, there was a downtrend followed by an uptrend in price. However, the green line never actually stopped moving down, and we saw a really sharp drop as soon as this divergence happened. As you can see here, and the pink line, the price went up while the green line continued trending down, and it shoved the price down really, really hard. The price versus whale money flow can be used similar to the trend exhaustion with trend divergence as well. Here we see a lower low and a higher high correlating in price on the same areas, followed by a massive downtrend. As you saw, this was a slight downtrend from the price versus whale money flow with divergence in price that was trending up, and it saw a huge move down. Overall, I like to say, when in doubt, follow the whale money. This will give you the highest chance of success in crypto. Now that you know how all of these indicators function on their own, let's jump into how to use these indicators in combinations to make your trades. If you pay attention to the trend exhaustion and price versus whale money flow indicators, you will notice general trends in their oscillations. As you can see here, both of them kept going up and down, sideways, down, up. And if you pay attention, you will notice that these correlate almost directly to price, although there will be times where there's divergence. And as I said previously, this typically will mean that the price is going to shoot in the direction that the trends are moving on the indicators. You may also notice that as these trends happen in the indicators, that the price will bounce in between the channels on the TC top and bottom finder. You will sometimes notice divergence between the price and the trend exhaustion and price versus whale money flow, as discussed earlier. As an example, we have an uptrend in price here, but both the trend exhaustion and price versus whale money flow had already began trending down, and we almost immediately saw this downtrend happen. When entering a long trade, what we're looking for is for the trend exhaustion to be in its bottom sections, ideally the outer bottom red section, and the price versus whale money flow to be low, ideally below 30. You'll notice here there's a green number. You can use that to judge exactly where it is. Right now, we are just about at the 30 line. So this is looking like we could be seeing a good entry soon. On top of this, you can see that the TC top and bottom finder is near its bottom green section. Because all of these are in their bottom sections, we are looking for a long trade setup. If you're looking for a short trade, it'll be the opposite. You're going to be looking for the trend exhaustion, price versus whale money flow, and TC top and bottom finders to be in their top areas on their respective indicators. For the trend exhaustion, you're still going to be looking for the outer top red section ideally. On the price versus whale money flow, you're going to want about a 70 or above. And on the TC top and bottom finder, you're just going to look for it to be above the blue midline, very near the top red area on its chart. Once all indicators are in their respective areas that you're looking for, you can begin looking for a signal to pop on the TC top and bottom finder indicator. Just to reiterate, we have the trend exhaustion in the very outer bottom red section with the price versus well money flow below 30. On top of this, the TC top and bottom finder is at the bottom green resistance level. All that there's left to do is wait for a buy or ideally a strong buy signal to pop, and as soon as that happens and the candle closes to confirm that signal, we are good to enter this trade. If the price is in a liquidity pool similar to right here, this just serves as an even stronger confirmation of a trade. If you want to be absolutely certain, you can throw in another indicator like the TC market reversal indicator. If there are green bars, this indicates a possibility of a strong move up. If there are red bars, this indicates a possibility of a move down. Here, we even have green bars confirming a possible buy signal as soon as it comes up. The absolute best signal you could possibly get from these combination of indicators is for the trend exhaustion to be in the bottom outer red section, the price versus well money flow below 30, and for the price to have fallen into a green liquidity pool with a strong buy signal. This is the absolute best signal you could possibly get. This is very likely to see huge moves up in the near future. The opposite is true for short traders. You're going to be looking for the trend exhaustion to be in the top outer red section, the price versus well money flow above 70, a red liquidity pool with a strong sell signal. This will likely see very strong moves down. A great entry is found with a regular buy signal and the trend exhaustion and price versus well money flow in their bottom respective areas. A strong buy by itself will also serve as a great indication for a possible move up and a great entry for a long trade. A good entry is a regular buy signal with the trend exhaustion in its inner bottom red section and the price versus well money flow below 50. Ideally, you will have wanted to see the price versus well money flow having already ticked up. Otherwise, you may still have room to go down. An all right signal, like I might enter this trade, might not, is a buy signal by itself, or the trend exhaustion and price versus well money flow in their bottom sections without a signal of any kind. These are areas I would hesitate to enter, but they still could potentially see a move up. Entries for short trades are similar, but instead of the bottom sections, you're going to be looking for the trend exhaustion and price versus well money flow to be in their top sections, and you're going to be looking for sell and strong sell signals instead of buy and strong buy signals. Once all conditions are met for a trade and you are ready to enter, you can use the trade setup to the very right of the TC top and bottom finder indicator to set up your trade. Let me show you how to do that. Right here, you're going to see a market order line. This is set exactly to the current price. This is where you're going to set your market order as soon as you find a confirmed buy signal. Again, a buy signal is confirmed on candle close. So this right here is a confirmed sell signal. This here is a confirmed buy signal. If the candle is still open, it is not considered an official signal yet. Keep that in mind. As soon as the candle closes and you are ready to enter, you can hit your market order in whatever exchange you'd like, followed by a take profit at 4% above the price you bought in at. This take profit is calculated for you at the top at this green line. And it doesn't have to be 4% if you don't want. You can adjust it right here. This is a multiplier here. And increasing this number, you could say, look for a 10% profit by doing 1.10. This will raise your take profit higher to a 10% profit. We personally like to use 4%, as we have found the vast majority of moves in crypto will reach at least 4%. We cannot guarantee this will happen, but most often we are likely to see strong 4% moves almost every time. From there, for risk management, you are going to set buy limits at these three levels. Again, you can set as many as you like, and you can customize how many are shown by checking or unchecking these boxes. For the lowest risk trades, you're going to want to split your initial investment into 4 parts, with the first 25% of your order being at the market order, and each of the rest of the 25% being put at buy limits cascading down the chart. The reason we do this is because either way, we are happy. If the price goes up and hits your take profit, congrats, you won that trade. If the price goes down, the buy limits will automatically buy the dip for you. You don't have to worry about it. Using this type of risk management strategy, we win no matter what. We're happy no matter which direction the market goes. If it goes up, we hit our take profit, we won the trade, and we get ready for the next one. If the price falls, it hits our buy limits, bringing our break-even point lower and bringing us into profit faster as soon as the market reverses and heads back up. Either way, again, we're happy and we make profit no matter where the market goes. You can get all the indicators you saw in this video and more by heading to the Trade Confident Gumroad store page. All the links for this will be in the description. Just follow that link and it'll bring you right to the page I'm about to show you now. If you buy the bundle pack here first, it'll include all 9 of Trade Confident's original indicators valued at $2,241, and you get this for just $3.99. On top of this, the bundle pack includes a $400 off coupon for the TC top and bottom finder, which can be found here, and it includes an extra indicator. So you get $400 off the $749 price of the TC top and bottom finder. With this, it comes out to a total of $748, just under the price of the TC top and bottom finder by itself, and you get all 11 of Trade Confident's amazing indicators. Tutorials for each individual indicator can be found on the store page as well. Just click on the indicator you'd like to learn about and watch the video on the store page. The indicator tutorial for the TC top and bottom finder can be found by swiping to the right here. Be sure to watch all these videos before you start entering your trades, just so you know you fully understand each individual indicator you are using. With that, thank you so much for watching, and if you have any tutorial requests, please leave them in the comments below. I'd be happy to do that. I want you guys to be as successful as you can be. We're all just trying to make good money here. Again, thank you so much for watching. We really appreciate it. If you enjoyed this video, please leave a like and subscribe. We provide daily crypto content, education, and analysis every single day. With that, remember, trade safe, trade confident, and I will see you in the next video.